Testing, testing. Good morning and welcome to Saxo Bank's live market call. Today is Tuesday, 4th of December. Yesterday was actually a rather quiet session with major ranges holding for the major currency pairs and very few market-moving key economic data releases. Few that are worth mentioning. I suppose we had Eurozone unemployment rate coming out for the month of October, pretty much along the expected lines at 7.2%. The expectations were for 7.3%. So basically, we have seen unchanged unemployment levels in Eurozone. Later in the afternoon, we had ISM manufacturing from the US for the month of November coming out exactly as expected at an index value of 50.8. And as we know, any index value above 50 is actually a positive sign. However, it's worth noticing that this index level was the lowest since January. So that is actually an indication of a slowdown in industrial production in the US. Later in the Asian session, we had Australian retail sales and building approvals coming at slightly disappointing levels, disappointing on both fronts. In the marketplace, yen continues its gains for second day. Dollar yen is already trading at 110.20 with a bias towards 110. Aussie yen, one of the biggest losers, is already at 96.40. As mentioned, fairly little movement in the major currency pairs. Euro dollar is now around 46.75, and dollar CAD is firmly above par ahead of the rate decision in Canada. On the equity markets, again, no major moves. American stocks conceded some of their gains from the previous sessions, with Nasdaq closing at 0.90% lower, and Asian stocks also broadly but marginally lower, with the exception of Hang Seng. On the fixed income side, as could be expected at the times of losing equity markets, we had some gains across the board, except treasuries, which conceded some of their earlier gains as speculation is increasing that the speculation on rate cuts in December from US have been somewhat overdone. On the commodities front, precious metals as well as crude prices little changed. Gold is clustering around $790 on the spot market, and the January crude contract is now trading just below $90 a barrel. So what's going on in the marketplace? Well, we had pretty robust US GDP figures last week, so that was a positive indication, coming out at 4.90 for the third quarter of this year. However, yesterday's ISM figures, ISM manufacturing figures, were somewhat disappointing. Although they came out at expected levels, they did indeed show the lowest levels since January, indicating that the factory activity in the US is again slowing. And yen continues to rise now already for a second day, and we are seeing continued carry trade unwinding. And this is partially due to US Treasury Secretary Paulson's statement yesterday that he has, to quote him, no silver bullet to stop the subprime mortgage losses from growing. As you know, Paulson is meeting with a group of, or is working on a plan with a group of large mortgage lenders to try and contain the subprime mortgage losses by freezing the interest rates for the time being. But he is acknowledging with his statement that there is no magic that would basically remedy the existing problems. Crude oil, as we mentioned, little change with little bias on the upwards. This is after crude prices hitting a 5-week low. So at the moment, the speculation is ever increasing that OPEC would indeed keep its production levels unchanged in its meeting this week. Today will be another day with very few key releases. One that is absolutely worth, of course, observing is the Canadian rate decision. This is at 14 GMT. The market consensus is by and large for unchanged rates at 4.50%. However, a 25 basis point cut cannot entirely be ruled out. In fact, on Bloomberg, now 11 out of 27 analysts are forecasting a cut. And if we do indeed see a cut, which again is the minority scenario here, then we will certainly see dollar CAD rallying strongly above 1.01. Later in the Asian session, we are going to see the Australian Central Bank announcing its rate decision. In Australia, they target the cash rate, and the expectations are widely for non-change rates at 6.75%. Tomorrow, likewise, a rather light day. However, we are going to see New Zealand's central bank announcing its cash target. Again, expectations are for non-change rates in New Zealand, as well as European retail sales. 6th of December, Thursday, that is, will be very, very, very active day. We have both BOE as well as ECB announcing their interest rates. The expectations are for non-change rates at 5.75 and 4% respectively. We also have Trichet speaking after the rate announcement at ECB's monthly news conference. And later in the American session, we are going to see initial jobless claims as well as continuing claims, sort of giving us leading indication to upcoming non-farm payroll. So Thursday, indeed, a very, very, very active day. On the FX markets, as mentioned, the ranges are rather tight, so we're looking to play the range in euro-dollar between 1.46 and 47 with a slight bias on the upside. On the equity markets, we have a recommendation to sell BMW as the global economic slowdown is becoming more material. The car producers are certainly going to be hurt. There's a fairly established downtrend in BMW, so our target is to sell BMW towards 42, keeping a stop at fairly tight at 42.50, and initially targeting 39 euros. On the future side, our trade of the day is actually in silver. We're looking at the March contract at this point, and we believe that there is going to be somewhat of a bounce after breaking 1420 area towards 1470 at the very least. So although it has been sort of sideways trading in silver as in gold, our intention is to buy silver towards for the 1470 area, 1420 area, excuse me, with a tight stop at 1408 and a target at 1470. And for more aggressive investors or speculators, the target, alternative target is at $15-20 a contract. That is it for me today. See you again tomorrow. Bye-bye.